Greetings, members, one and all of the Salivation Nation. Could silver be emerging from gold's shadow? Let's explore! We're taking a look at some commentary from valuewalk.com, a website that I've never heard of before, but an interesting article here that talks about silver and how it has really been behind gold's shadow for quite some time. And this is bringing us to a new mode of discovery here. We know that silver is more volatile than gold, and that will continue to be the case for sure. And that's part of the reason why I have moved more towards gold in recent years. But let's see what they talk about here in this particular case. Silver has remained in the deep shadow of the main metal, they say, for a long time. However, the recent silver pump, thanks to the raid of Redditors, has come as a surprise. It's one thing to manage the prices of individual shares of gaming companies that are losing popularity, and another thing to control the price of one of the most important commodities. And exactly, that's a big giant to tackle, especially since many believe it's manipulated and suppressed, really, is what many people think. But what can we expect next from commodities quotes? How are gold and silver prices related to other commodities such as oil? Will the silver rate rise? While both silver and gold are classified as metals, silver is in some ways closer to oil than gold in the market. Gold is actively used by private investors in entire states to reserve capital, hence why, and I've covered this since April of 2019, it has been designated as such a Tier 1 asset from the Bank of International Settlements. As for silver, today it has largely lost that function. Exactly, markets don't really see silver as a monetary metal. They see it as a commodity, an industrial and technological and medical metal. The states do not keep it in gold and foreign exchange reserves, and only 10% of the demand for silver is demand from investors. Most of the market is covered by industrial needs, as is the case with oil. It is for this reason that silver now, like oil, has a positive trend, while gold has gone quite deep down from the summer records, but not down that much. I will make note of that. Gold has not lost a whole lot, especially on a percentage-wise from where it was last summer. Most of the market is covered by industrial needs, as is the case with oil. It is for the reason we see this now with gold, with gold going down, again talking about in the summer. Silver is its own way close connection with gold. It does tend to follow gold, although recently we've seen kind of move in the inverse. It is usually mined simultaneously with gold as a byproduct, and by the way, it's more largely mined as a byproduct of other metals such as copper, zinc, and lead. Therefore, silver mining strictly follows in the wake of gold mining, and only then their paths diverge. Its historical record is around $50 set in 2011. However, by 2016, its rate dipped to $14, after which it began to recover. In general terms, this resembles the dynamics of gold, which also had a long dip in the mid-2010s. However, the dynamic of silver are now more similar to the dynamics of oil. So let's take a look at these and how this compares. The commodity is usually a barometer of investor expectations for the economic recovery. Today, oil costs more than $60 a barrel as it was in January 2020, and this is logical. It's expected that the number of vaccinated Americans will reach 50% in April. If we add to this figure the number of people who have been ill and have immunity, then in April, the United States and a number of other countries, the end of the pandemic can be expected. Individual countries such as Israel are vaccinating even faster and could fully implement it by March. From new strains from Britain and South Africa, some vaccines, such as AstraZeneca and Johnson & Johnson, showed reduced efficiency about 50%, but the creators of other vaccines, like Pfizer, report high efficiency about 90%. Be that as it may, it's easy to calculate the vaccination of 70-90% of the population with any of the illicit vaccines will suppress a pandemic. Even the most infectious strains will spread much worse among vaccinated people than completely unvaccinated citizens. In addition, there is an OPEC agreement on the oil market to limit world production of raw materials, which makes the situation especially manageable. Oil workers expect a significant recovery in demand in the spring, and therefore are already trading spring futures at a fairly high price. Prices are likely to remain at least $60 in the coming months, and we can make that comparison with silver. Although, I think there's a lot more than just the pandemic at play here. You are seeing a move in that direction because of environmental initiatives, especially by the Biden administration. A lot of money being put out for solar and EVs and all that type of thing, which is going to increase the demand for silver. So gold in the market is very different from that of oil. It is not actively used in industry. I mean, there is some use in industry for gold, but not nearly as much as silver. It is more famous as a defensive asset, a hedge, and has played this role in 2020 quite expectedly. After a general collapse, its rate began to recover earlier than stock indices, and in the summer, and continued uncertainty set a historic record. Many, due to the uncertainty for stocks and the dollar, preferred gold to them, raising its quotes. By the way, also cryptos, especially Bitcoin. Now the situation is much more certain than in the summer. Stock market is overheated. Many capitals from gold in the wake of the general euphoria spilled over into stocks. The gold rate generally dipped. What will happen to him next as the economy recovers? The answer here is not as straightforward as in the case for oil. In the spring, it is very likely that the stock market will still be in high positions and gold in low positions, possibly stable below $1,800 an ounce. The euphoria of victory over the pandemic will allow the overheated stock market to maintain its controversial records and set new ones. But by the summer, we can expect a recovery in a gold rate and new records above $2,000. I tend to agree. I'm still bullish on gold as well as silver, and I think we're going to see above $2,000 too this year. We have the recovery in business activity will accelerate the devaluation of the dollar. In other words, we're going to see the velocity of money increase, and a lot of that money is what's been injected into the system by the Fed. Yes, I use the term money instead of currency. It is currency, but I'll have to do a video to explain my position there, because I do understand the difference between money and currency. Some of its holders will transfer capital to metals and cryptos, and then a return to a peaceful life will force investors to look at indices more soberly. Overpriced stocks will fall. The current Fed policy makes a sharp collapse in the stock bubble. Unlikely, but a gradual deflation is likely. The loss of confidence in the shares will force some of the holders to buy the same gold or cryptocurrency instead. Its historical record of silver is $50, and we saw a dip down. But the thing is, really, if you look at it in terms of real dollars, the historical high was in 1980. And so we'll see how this plays out. So at the beginning of the year, silver was worth $18. In March, it fell to $11, but by August, it had recovered to $25 to $28, and it did touch very close to $30. And then we saw in February, thanks to the action of Redditors, it jumped to $29, but then rebounded very, very quickly. Now we have a physical squeeze in our hand that is continuing to this day, and the premiums are further diverting from the spot price. The spot price has actually dipped today. And so what's happening here is, back to the title of this thing, silver is emerging from gold shadow for now. And it's kind of driving where things go in terms of the premiums, much higher for silver than gold, but gold's premiums are still high. There's a demand for both metals right now. And so when you see this move, now we're seeing the gains claw back today for silver, we see that gold has dropped, but silver has dropped even more. Big drops for platinum and palladium. But look at this. This is kind of the movement that we're seeing, that we're used to seeing in terms of the movement of silver to gold. And this movement downward has definitely increased the gold to silver ratio. Now it is above 65 again, which tells us that even though there is a great demand on the physical now, some people are blaming this as a big smackdown before the commitments of trade or what have you for delivery for the COMEX that's coming for March. Of course, when that will actually be later in the third week of March, I'm not sure. Will they decide to take and pause that delivery and move that out till May? We'll see. I think with the news about that and disseminating of that news is going to be quite interesting to see how that plays out in terms of physical buys for silver. Has it emerged from the shadow of gold? I would say yes, to a degree. I think that the pure demand for the metal, so that manufacturers and miners can't keep up, or maybe won't keep up. In other words, there's been talk about some of these silver miners holding on to the metal for now until the price does increase, so they can realize some good profits and move forward. And them doing that is in some way in a manipulative state to the upside for silver. So that's why these natural market forces, I believe, play a much larger role on a macro scale, especially when you have miners holding back delivery of the metal for refining, so that they can be in a position to be able to profit from a higher spot price. So we'll see how it plays out. It is fascinating indeed to see, and that where it looks like that silver is emerging from gold shadow, but you wouldn't tell it by today's price movement. Let me know your thoughts in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.